It's 2020. Is the world going to end? Are we all going to become multimillionaires? Or is something else going to happen this year? Sit back and let's talk about it. I'm Justin Miller with the Chong Miller Group, and this is the residential real estate market update for January 2020 in the Las Vegas Valley. So what I'd like to do in this video is I'd like to take a couple minutes to just talk quickly about the statistics. They're kind of interesting. And then I'd like to sort of set the context for what I see through the rest of the year and why I make these projections about what I think is going to happen. So first off, let's go ahead and get to the numbers for December 2019. Now, December 2019 was actually a surprisingly strong month. There are seasonality issues associated with the market here in Las Vegas, as there are with real estate markets everywhere around the country. And so usually we see that December and January sales numbers are the lowest of the year. People are not searching for homes during the holidays. They're not wanting to move during the holidays. But December 2019 actually bucked the trend. In December 2019, we had 2,423 single-family homes in the resale market in the Las Vegas Valley trade hands. That is actually up 150 approximately from November, 2281 in November. Interestingly, it's up quite significantly, 450 or so from, which would be almost a 17% increase in sales from December of 2018 when closings were 1,990. So December was quite strong in terms of number of sales. What about in terms of prices? Well, December, the median resale price, again on a single family home in Las Vegas Valley, was $308,000. This is up a little bit from November's $303,000. It's up fairly substantially from December last year, December 2018, which was $290,000. Now, I will point out, if we inflate the December 2018 number to December 2019, right, there was inflation. December 2018 was actually about $296,000 in current dollars. So we had about $12,000 of price appreciation from December 2018 to December 2019. Now, there's been some talk already that this is the year that we're going to hit and exceed the highest resale sales price number that we had seen in Las Vegas history, which was $314,700, achieved in June of 2006. So in some manner, that's an easy target. This prediction was made at the beginning of last year by other people. I said I did not believe that was going to happen. That prediction had been made for 2018. I did not think it was going to happen then. This year, I think the likelihood is we will hit that number. We'll probably exceed that somewhat. We'll probably end up with about 5% price appreciation over the course of 2020. I believe, I'm projecting. But I do want to point out, and I've pointed this out in some prior videos that I've done, the 2006 number, 314,700, is just kind of a magical number, right? In some manner, it's made up. Yes, it happened to be the number that was achieved at that point in time, but that number needs to be inflated to the current value of dollars, right? A dollar that you had in your pocket in 2006 is not worth a dollar today. Because prices have gone up on other things, right? There's inflation, and so we need to discount those dollars. So the discounted 314,700 actually now is 401,750. So we've got a long ways to go to get to 401,000. What does that mean in terms of affordability? There have been a lot of market prognosticators and market participants who've been complaining about affordability, that we're almost unaffordable here in Las Vegas, that prices are approaching the peak level. Well, actually, again, prices are not approaching the peak level, which translates to $401,000. Affordability here is actually quite great. And in fact, I just had a closing with a client the other day before recording this video. And I make comment about it not to make fun of anyone or to insinuate anything about anyone or any particular property. But the property we closed on sold for considerably less than the price that it had been in 2005 when that property was actually built. So individual properties have not necessarily recovered what they had achieved in the 2006 timeframe. Some properties certainly have, some properties have not. Overall, the market is improving. It's going up, but we're not seeing the kinds of prices that we saw realistically, certainly inflated for current values at that particular point in time. Now, a couple of other numbers. Total sales for 2019 were, again, single family residential resale, 30,578. That's through the year 2019. This is down a little bit from 2019. 2019 ended weakly, but it had been a strong year overall. The number for 2019 was 31,226. So there's about 700 homes less. And I do want to point out, kind of interestingly, going back and looking at the statistics, in the year prior to April 2012. So that would mean from April 2011 to April 2012. That 12-month period saw 37,600 home sales here in Las Vegas. So we're not running at that kind of rate. Many of those home sales were actually short sales, foreclosure sales, other distressed sales, as well as cash sales to investors coming up buying a lot of distressed properties. And so we had about 30,500 sales this past year, 2019. Now I'll contrast that with 2008, February 2008, and the year prior to that, February 2007 to 2008, we had achieved only 13,100 home sales in the Valley. And again, that was a particularly weak period of time because of the financial crisis. Could we go through a financial crisis again? Yeah, sure, the world could also end. Both of those things are pretty unlikely. Banks don't exist in quite the same manner that they did in the 2004 to 2008 timeframe. Leverage in the residential market is considerably less. If you look at the number of loans that are actually written as adjustable rate mortgages today, it's less than a quarter of what were being written in 2006. The lending standards, and especially lending standards on adjustable rate mortgages, are considerably tighter today than they had been at that time. And so we're just not seeing the types of higher risk, not necessarily high risk, but higher risk leveraged activity that we were seeing in the real estate market a decade and a half ago. And so we're not really set up for that kind of a crisis. Similarly, across banking more generally, there have been some regulations put in place. Some are good, some are bad, some are weak, and some are strong, that have reduced some of the leverage problems that we had seen leading up to the financial crisis, and in fact internationally as well. So I can tell you for 2020, things are looking really good, right? We're starting off. January is actually a stronger month than others have been anticipating. I project that we're going to have a very nice level of home sales this year in the Valley, higher considerably than what we had seen in 2019. Probably, in fact, I would project certainly higher than what we'd seen in 2018 as well. Prices, I believe, will be going up in the 5 to 7% range here in Las Vegas over this next 12-month period when we look back at what 2020 achieved. Why do I say these things? Well, nationally, home buyer sentiment in 2019 actually hit record levels peak and is remaining at very high levels. Part of that is interest rates. Interest rates in December actually, the average mortgage rate, 30-year mortgage rate across the country was 3.68%. This was the lowest since October of 2019, but it's actually historically low. Average mortgage rates below 3.75%, incredibly rare. In fact, average mortgage rates below 4% are very rare, and they're kind of an outgrowth of the remnants of the housing crisis. We've just not achieved very high rates of growth in the economy overall or in the housing market. And so we've got these very low mortgage lending rates. I can tell you as well, the Las Vegas Valley is growing by approximately 60,000 net people per year. Obviously part of that's births, obviously part of that is in-migration. There's out-migration as well, but net we're growing by 60,000 people per year, approximately. Those people need to live somewhere. If we contrast that with California, we can look at different markets in California, but many of them are experiencing out-migration, net. Where are those people going? Well, they're leaving places like San Francisco and Silicon Valley and Los Angeles and Orange County and even San Diego, and they are going to places that are easier to live in, places that have lower tax burdens, places that have higher qualities of life. And so yes, they give up perhaps the beach, but they gain a lot if they come to Las Vegas. And we are getting very significant numbers of Californians coming to Las Vegas year over year, and that's going to continue. We also see people moving here from Illinois, from New York, from really cold states where we might expect people want to be fleeing to nicer areas. We actually get in-migration here from Texas and Arizona and a couple of other states, which is kind of interesting, some of which are perhaps a little bit unexpected. So we're growing, and the people who are arriving here, many of them look at our real estate and they say, I can live really well at the prices that I was expecting to pay, and they need to live somewhere. Well, construction, new home construction in Las Vegas is lagging behind. And so existing homes need to fill the demand. Right now, there's actually a lack of inventory. In fact, this is actually the number one problem that's existed in the marketplace since the housing crisis, and it continues and will continue through 2020 and likely will continue for the next 4, 5, 6 years in Las Vegas, and that is depressed levels of inventory. We need more houses for people to buy, and they can be built. Obviously, people can move out and their house comes up for sale, but where are those people going to go? Right? And if, in fact, it's exactly that, where are those people going to go problem that has reduced the level of inventory that we're seeing in the market. And so a healthier market, one that's very dynamic, is going to see higher levels of inventory than what we've got right now. So inventory, especially in the below the median price, below the $308,000, in fact, actually below $350,000, is very constrained. Inventory in the $350,000 to about $800,000 is constrained. It's not super tight, but there's a lot of new construction that's taking place in that area, and so demand supply is approximately balanced. Over $800,000, we still have excess supply, and that will continue likely into the future. Once you get over about $950,000, there are tax issues associated with the current tax code that have depressing effects on home prices. Doesn't mean those homes aren't valuable. It doesn't mean they won't transact, but it does mean that the buyer pool is smaller for those homes than we might otherwise expect. So we also have a lot of investment that's taking place in Las Vegas. Right? We've got the Raiders are coming. So the Raiders are either coming or they are invading. Take your pick, but they will be here in the middle of 2020. They're $2 billion stadium, either the most expensive or the second most expensive football stadium in the entire country, and consequently the entire world, depending on whether you count the ancillary things like hotels and parks and things associated with the stadium being built in Los Angeles. We've got the AEG Sphere being built, which is a convention center and performance space. We've got a $1.5 billion expansion of the Las Vegas Convention Center. We have a lot of other convention space going in around that, actually. Expansions from Wynn, expansions from Caesars. We've just had a very big expansion in convention space with Mandalay Bay. Aria added a couple 100,000 square feet of convention space. We've got downtown, a project with an unknown price tag, but over $1 billion. Circa, the first new resort being built in downtown in 40 plus years. And we've got lots of road projects, right? We've got lots of school building projects. We've got $125 million in donations that just been issued for building a new school for the UNLV medical school. And so these investments are supporting growth in the valley. They're supporting people coming to the valley who want to move here and want to live here. There's expansion in the types of industries that are here in the valley, with lots of growth in especially North Las Vegas and in the Henderson area around the Henderson Executive Airport for light manufacturing, but also especially distribution. We've seen this past year, 2019, more than 50 million people transiting through arrivals and departures McCarran International Airport, a record number, and that's likely to continue to grow for a variety of reasons. So we're set for growth here. Recessions, I've talked a little bit about recessions in the past couple videos. Recessions come, they go. Housing prices do not typically go down during recessions. They do not actually have high levels of correlation to recessions. And so will we have a recession this year? I don't believe the economic data actually support the idea of historically a recession with interest rates this low, or with consumer confidence at this level. Recessions are generally in the US consumer-led, and where we have problems in the economy right now are largely around trade issues, not consumer issues. That doesn't mean that a recession's not coming. They can come. They are cyclical, and we will have a recession at some unknown point in time in the future. But where interest rates are now, I don't foresee a recession actually in 2020. I think that we'll make it through 2020 before we see an economic downturn. And again, when the downturn arrives, it does not necessarily have implications for housing prices. So that's it for the January 2020 market update. I see great things ahead for Las Vegas. I see great things ahead for the housing market in Las Vegas in 2020. And looking further into the future, I think Las Vegas is extremely well poised for additional growth. And that means very well poised for housing values. Places that have housing value problems over periods of time, right? Not short downturns, but over periods of time. They're places that are depopulating. And there are places in this country that are depopulating, but that does not mark Las Vegas. Las Vegas population is growing. It's growing in a healthy manner, and that should continue. So I am Justin Miller with the Chong Miller Group, and I specialize in the Las Vegas real estate market. If you're interested in building a new home, or if you're interested in buying an existing home or selling your home, I'd really like to talk with you. I'd like to be able to give you my comments and my recommendations, advising you on how to do that. Please put me on your short list. Get in touch with me or with Jason, and let us talk to you about how we can help you through your real estate adventures. Please, if you're watching this on YouTube, subscribe to our YouTube channel. If you're watching this on our website, that's fantastic. That's good too. You can find us our website, Chong Miller Group, and you can reach us via email at info@chongmillergroup.com, or the phone number on the screen. Thank you very much. I look forward to talking with you soon.